Hi everyone and welcome to my YouTube channel. Nice to have you here. My name is Benny, and in this video I will be explaining the difference between trading and investing. What is the difference? Well, let's start. So this is something I hear a lot of people talk about. Yeah, I'm an investor, or yeah, I'm a trader. Well, basically, to make it very easy, trading and investing is more or less the same thing. Sure, there are some differences, but it's more like this. The differences are this big, and it's more like someone having like an identity. You know, they want to say that yeah, I'm an investor, or yeah, I'm a trader. And I'm gonna show you on the computer right now an example of what I mean, and that will make it super clear. So let's check on the computer here. Alright, so this is my trading platform. It's called IG. Go to IG.com. Really good. I like the layout, and it's where I usually sit and try to discover new trades. And yeah, so I've chosen Activision Blizzard, which is an American company, and I've just chosen this graph to explain to you the difference between investing and trading. So usually when you are trading or investing, you on the stock market, you are looking at candlesticks. But for you beginners who maybe are not really that familiar with candlestick, it will be much easier if I just take a line. So this is in Swedish, so I'm sorry for that, but the graphs are still the same. So basically what we have here is a period from 2007 and 2017. So let's go back in time. Let's go back to the beginning of 2011, and let's presume you are identifying yourself with being an investor. So what is an investor? An investor is someone who buys a product. It doesn't really matter if it's an apartment or if it's a stock market product. That person will buy this product, and hopefully in the future they believe that the market for this type of product has been going so well that they can sell the product at a much expensive price. That's the whole idea between with investing. And also together with investing is the fact that you can get paid by owning this investment during that time. So for example, if you have an apartment, you will get money from renting it out, and if you have a share, you will get dividend, which is the pay every company pays their shareholders for owning their share, for have bought their share from the market. So basically what's going on here is that, let's say this investor, let's say that's you. So you decide to buy Activision Blizzard in 2011, and you buy it somewhere around here. So this is where you buy the share. And then the future itself presents, and you can see that in 2018 the value of the thing you bought over here, it has more or less quadrupled, or sixtupled, or how you say in English. So basically we're up here. So you have made a very profitable investment. Now, because you didn't really care where you bought the share, because you had the strategy that the company will continue with their profits, that will indirectly push up the share price of the price of the stock. And yeah, in 10-year times or in 5-year times, you were thinking that Activision Blizzard would be sold at a much higher price. And that's the case right now, and you sell. So what happens? You sell here and you say to yourself, oh, I've done a great investment and I earned a lot of money. But at the same time, what you actually did was also taking a trade, but you didn't think about it. So when you bought the share down here, or even if you bought it in 2007, you have made a trade. You have bought something and then you have sold it. And that's like the definition of trading. So you are also, my friend, a trader, but you don't identify yourself as a trader because you've only taken one trade. You've put all your money in Activision Blizzard, and that investment paid off, and you earned a lot of money. That's what you see it. But if you were to identify yourself as a long-term trader, you would have done more or less the same thing. The only difference is that you would have been much stricter when you would have taken the entry. And the entry is when you buy a share at a certain price, you call that an entry. And when you sell it, you call that a target or an exit, like where you want to sell, and there where you sell, you have exited the market. You have ended your trade. So a trader, if we go back to 2011, would have basically done the same thing. So at this point, let's say a trader for some reason wants to buy the share here because he believes or she believes that, okay, we're moving down to this bottom. You can see this bottom here. So that's the lowest price that the share have been traded for or exchanged by a buyer and a seller. That's the lowest price it's been exchanged for. And we're going towards that area. And maybe I just want to wait until we go down here to buy a trade, because we can see probably the same reaction when we get down here, that we get some kind of bounce on that bottom. But as we can see, the market decided not to bounce down here at the bottom, but some buyers came in and they bought it, and actually got over this little top here, which may have indicated for some traders to enter the trade. So let's say I'm a long-term trader, or you are a long-term trader, and you jumped here. What would happen? Well, as a trader, you would have stricter rules when to exit, because you're not obliged. You don't buy the company because you believe the company will continue their profits and continuing to grow. You buy because you think the market thinks that this company will do this, and therefore you buy. So that's a big difference. Like, that's a mentality thing. Like, traders are more observant of how everybody else thinks and what everyone else will be doing than thinking about the company itself. So that's maybe one major difference between investors and traders. But anyway, so the trader will have stricter rules when to exit the trade. As you can see, maybe these rules, it depends what kind of trader and what strategy you have, but maybe that rule was never fulfilled. You know, the exit where I should exit, or where you would exit, was never fulfilled. So the exit was never triggered. So maybe this trader bought it here and he's still in the trade. So maybe you are still in the trade, and as a trader, you want to ride your winning horses. That's one of the big mistakes a lot of traders do, that they cut off their profits way too early. So as you can see here, as a trader, you could have basically been following this path all the way up to here. Obviously, you need to be a really long-term trader in order to do a trade like this, but the principle is the same. Like, a swing trader would probably have gone down and swinged all these movements. You see here, this is just like 1 month in 2018. A swing trader would have traded maybe these movements or these movements, even down to 2017. Like, a day trader would probably trade just like these months, these weeks, you know, in March 2018. So anyway, I won't be too complicated. If we go back to the graph, let's go for a month. If you're a long-term trader, you would have still been in this trade. So as a conclusion, it doesn't really matter if you are an investor or you are a trader. What matters is that you enjoy what you're doing and that you make profits doing it. And an investor who bought down here and now decided to sell, he has done a trade. A trader who has bought here and he's still in the trade, he's made an investment. So it's the same thing. So don't get stuck up on the terminology. Just focus on what you want to be doing, find your strategy, and that's what we are going to talk about a lot in these upcoming series. And I hope you want to follow me, because I believe I can give you some really nice information. But as a conclusion, I will write the difference down here in the description so you can get it on text. But I think you get the point, and I think that you understand that it doesn't really matter what you do or what you call yourself on the stock market, because you will still everything is still focused on making money and having a great time living the life as a trader or as an investor. Thank you very much for watching, and I see you in the next video.